Hello everyone, this is Riya Singh, the Senior Research Currency Analyst for Nirmal Bank. So let's look at what has happened into the Forex market so far. Now we have seen USD INR dipping quite a bit towards 80.80 levels. This is the steepest appreciation that we have seen into the USD INR in quite some time. If you see at the dollar index, it also slid below the levels of 102. Today actually now stabilizing at around 102 levels. So there was a quite a dip into the dollar index as well. Now what could we derive from what has happened in the past few days is I think the sharp appreciation that has happened is purely on the back of the FII inflows and the sentiment that there will be a relaxation that will come forward with respect to the rate hikes from the Fed. So this has fueled risk on sentiment over the globe, and we are seeing Asian currencies performing better against the dollar as compared to the previous months. So this is one of the reasons why we saw such a good appreciation into the USD INR. But as it dipped towards 80.80, there was a sharp depreciation of around 60 to 70 paise. Today it is trading at around 81.70. Why? Because I think RBI has intervened into the forward market, and this is not the first time that it had done so. Now, if you look at the history of the RBI interventions, whenever the rupee has shown such a sharp dip, the RBI has come in order to refurbish its already declining forex reserves. So I think even yesterday RBI had come in and has come forward into the forward market and has bought in dollars. Because now, as far as forex reserve is concerned, there was a continuous steep decline into our forex reserve till August. Now from November, if you look forward to it, we are seeing a gradual increase into the forex reserve. So this is a fact that RBI has started to replenish its forex reserve. Firstly, from the FII inflows, which is a natural form of replenishing it, and secondly, it buying the dollar from the forward market. So what we can conclude from this is not a sharp decline could be seen into the or appreciation could be seen into the USD INR. I think RBI has drawn a line at around 80.50, 80.30 levels, and any such appreciative levels if achieved will be an opportunity to go long into the pair. So whenever you see rupee testing 80.50, 80.30 levels, you could go long into the pair for a target of 81.25, 81.80 levels. 81.80, 82.25 is the strong resistance that could be seen into the USD INR going forward. So I think all in all, a broader call that you can take is it will remain within the levels of 80.50 to 82 levels going forward, and there is no sharp or it will breach any of these ranges at least for some time. As far as dollar index is concerned, now for the dollar index, I think it will stabilize at around within the 101.50 to 103 levels. Firstly, because the numbers that have started to come in is indicating that there is a pressure into the economy. Inflation has cooled off from the highs. So this is another trigger for the Fed to slow off its aggressive rate hikes and to shift towards neutral stand. And we will see so happening. Market is also discounting that rather than 50, Fed may go for 25 bips rate hike. So all this is creating a pressure into the dollar index, and thus we are seeing it stabilizing at around these ranges. For pound and euro, euro PMI has already come in for France and Germany, which is showing a contraction into the economy. Though time and time again, ECB governor has come out and said that the economy will contract a bit, but this is the cause that they'll need to factor in order to get the inflation under control, and they have continued to remain hawkish into their statement. For UK, Bank of England has nothing but to go hawkish, because though the inflation has cooled off from the highs, where euro is seeing a single digit, US is seeing a single digit, most of the Asian India is seeing a single digit, but UK is still in the double digits, so there is still need a rate hike that needs to be done, because though there is a cool off into the energy prices, whether it's crude or gas, there is not a major impact into the inflation numbers as far as UK economy is concerned. So Bank of England will go forward with the rate hikes. Some cool off can happen in a day or two into the pound and euro, seeing that they have rallied quite a bit from the lows that we had seen. But overall, I think both pairs should again rebound and trade on the positive side, creating a pressure on the dollar index. So that's all on the currency front. Thank you everyone for joining in.